Namaste fellow investors. Welcome back to Prosperity Funda. I'm your host, MG, and today we are delving into a fundamental concept that's crucial for anyone navigating the stock market: circuit limits. We'll explore what lower circuits and upper circuits are, when do they occur, and how they affect different types of stocks, including F&O and non-F&O stocks. So, let's get started. To truly grasp the concept of circuit limits, it's crucial to understand that the stock markets can be extremely volatile. Prices can fluctuate rapidly due to various factors such as news, earnings reports, and market sentiment. To prevent extreme price movements, circuit limits are put in place. Circuit limits are essentially price bands, beyond which a stock cannot trade in a given trading session. These limits are calculated as a percentage of the stock's previous day's closing price. Now, let's talk about the lower circuit. This is the price level at which trading is halted because the stock's price has fallen too rapidly. Once a stock hits the lower circuit, trading is temporarily suspended, which means there are usually no buyers for the stock at that moment. For instance, if a stock's previous day closing price was 100 rupees, and the lower circuit limit is set at 10%, trading would be halted if the stock falls to 90 rupees. This pause allows market participants to digest the information and prevents panic selling because of the absence of buyers. On the other hand, the upper circuit is the price level at which trading is halted because the stock's price has risen too rapidly. When a stock reaches the upper circuit, trading is again temporarily suspended. This typically means there are no sellers available at the current price. For example, if the same stock had an upper circuit limit of 10%, trading would be halted if the stock's price reached 110 rupees. This is done to prevent excessive speculation and manipulation, as well as to give investors time to react to significant positive news without being able to sell at exaggerated prices. It's important to note that circuit limits are revised periodically, typically after a few weeks, based on market conditions and stock price movements. Now, let's discuss the difference between circuit limits in F&O futures and options stocks and non-F&O stocks in India. Circuit limits for F&O stocks are generally higher than those for non-F&O. This is because F&O stocks are more liquid and actively traded, making them less prone to manipulation. Now, let's delve deeper into an important distinction regarding circuit limits in F&O versus non-F&O stocks in India. In F&O stocks, circuit limits are designed to reopen in either direction after a specified pause. This means that if a stock hits the upper circuit, trading will be halted for a certain period, usually 15 minutes. After this pause, if there are no sellers at the upper limit, the circuit will be revised, and trading can resume at a higher price. Conversely, if the stock hits the lower circuit, the same process occurs. Trading is halted for a brief period, and if there are no buyers at the lower limit, the circuit will be revised, and trading can continue at a lower price. This revision mechanism is in place to ensure that price discovery can take place even in highly volatile conditions and to avoid prolonged freezes in trading. It allows for more flexibility in F&O stocks. However, in non-F&O stocks, circuit limits typically do not revise during a trading session. Once the lower or upper circuit is hit, the stock remains locked at that price for the rest of the trading session, without reopening in either direction. This is done to prevent excessive price manipulation and maintain stability in these stocks. So, in summary, F&O stocks have the advantage of circuit limits that can reopen after a pause, while non-F&O stocks tend to stay locked at the circuit limit for the entire trading session. And there you have it, a comprehensive understanding of circuit limits, their importance in the Indian stock market, and the key differences between F&O and non-F&O stocks when it comes to circuit revisions. If you found this video informative, please hit that like button and subscribe for more financial insights on Prosperity Funda. If you have any questions or need clarification on any topic, feel free to leave a comment below, and I'll be happy to help. Until next time, happy investing, and may your portfolios always be in the green. This is MG signing off.